Welcome to this edition of Traders Exchange. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. So we're going to be doing something different than we've ever done for Traders Exchange today, and it's going to be a little bit more interactive. And when I say that, the questions that the students are going to be asking they're going to actually be talking, so they can respond and kind of have a more of an open conversation. And there's really basically two reasons that I wanted to kind of change this up a little bit. Number one, I find a lot of students letting me know and telling me that they have trouble articulating a question that they have in writing. So they feel that after they've kind of put it in writing, they're not really able to, to get out exactly what they're asking for. And I can completely understand that. So it's a lot easier to kind of go back and forth to really find out what you're trying to get across. And number two, the questions that you put in, remember, these questions are not coming from me. They're not topics that I'm telling you that, they're all based off topics that you need to understand. But it's a free coaching session specifically to train your thought process. And I honestly don't see any better way to really be able to kind of get inside your own head and really see where you need to start, working on, and even the thought process behind the question, where's it coming from, so on and so forth. So we're going to kind of get into the psychology of an individual's thought process. So definitely utilize this. We're probably going to do about 2 to 3 people each session, depending on how long those questions come in. But we're going to be doing it. We're going to try it out bi-weekly. I still want to have it so people could send in questions. I know not everyone's actually able to attend at 12:30. So for those people, I still want them to be able to ask questions, to be able to go back to recording. So we're going to try this out bi-weekly and kind of work from there. But first person on the board today is Davis. Whenever
Afternoon, everyone.
What's going on, Davis?
Just excited to be doing this. I appreciate you letting me get on here, pick your brain about a couple of things. What's up, everyone in the chat? Well, in the Traders Exchange. So my question has to do with pre-market. It was something we talked about yesterday. I wanted to know or hear you talk about pre-market, maybe in a broader sense, something that you've noticed just throughout the methodology, the life of the methodology. And I might ask more specific questions as we go in. But then I also, in the second part of the question, want to ask about the pre-market right now, what you see, how we can tell if prints are longer term or if they give us a clue that that's somebody that wants to make money today. And I think all these things apply to both old and new traders, because we're all constantly working on condensing the amount of time it takes us to make the game plans and create or set up our reads. So if we can get good at it with information in the pre-market, that will maybe set us up for our first trade or even the rest of the day, I think it'll be hugely helpful to other people.
All right, so let's start with the beginning of your question, kind of overall understanding pre-market. So what I'm going to give you, I want to, we'll start off with kind of what it was, and then how we've adapted to it and how it's kind of changed coming into, right now. So when I first started, the pre-market used to be, it used to be a great indication of what was going to go on for an entire day. Okay, you would really see market makers coming out there and just kind of blatantly obvious, showing exactly what their intentions were going to be. So when, for instance, I think about it when I'm doing a morning meeting. When I used to do a morning meeting in the beginning times, I used to have a list of, sometimes 10, 12 stocks. And these 10, 12 stocks, I know it sounds like a lot, but they'd all show us something. You might have, out of 12 stocks, have 2 sideless stocks, but you'd actually have 10 stocks showing a game plan. And when I say for the day, as of probably about 2 years ago, in somewhere in that range, you started seeing more people coming in to trade the pre-market for a trade coming in the shorter time for the open. So you didn't see as many as, as time's gone on, you've been seeing less and less people come out and really give that indication of let's say an uptrend for an entire day or a downtrend for an entire day, and really show almost the personality of the stock within the pre-market. And as they've developed, they've been doing a lot less of that. And in my opinion, I mean, there's, you could probably make up a whole bunch of different reasons for that. But in my opinion, people are getting smarter. There's more people that are out there trading. And now when I say smarter, there's a lot more information out there. How you utilize that information within your trading is neither here nor there. But there's a lot more people that are not only trading, but out there. And there's, like I said, there's just a lot more information going on. So I almost take it as back when I first started trading, trading was almost this like when you heard somebody was a trader, they lose their money or they should have a house in the Hamptons. It was like one or the other. It really wasn't, where, anyone that you just walked into at a bar all of a sudden knows about trading now. So I think that over the course of time, because that's been happening, they're doing a lot less in the pre-market. And the reason being is because you can see so much that goes on. There's really no place to hide. So if you want to build a big position, there's really no way to go about it besides, but showing exactly what you're looking to do. So let's talk about that kind of transitioning into what I see in the pre-market now is basically nothing. And I hate to say it that way. But I was talking about this a little bit yesterday. I'm seeing a lot more over the past probably year, 6 months to a year in that area. I'm seeing a lot more being developed towards the end of the market going into aftermarket, as opposed to showing that in the pre-market. And then the pre-market's actually getting affected by the work that they're doing the previous day before. And the reason I really think that is because it's just so much easier to go about it. Coming into the end of the market, most stocks that you're going to be looking to trade, or even if you're looking to set up, something for tomorrow, there's a lot more volume that you're able to kind of hide it within because there's a lot more people trading. Now, what do 90% of people out there do to their computers when 4 o'clock hits?
Turn them off.
They turn them off. They're not paying attention anymore to what the stock's doing. So it's almost like they're utilizing that part and the aftermarket part as their pre-market, the way that they used to do it within the pre-market, because it's hiding a lot more of the intentions of what, and when I say hiding, it's not hiding. They're showing us exactly what's happening. We're seeing the prints. They're showing us the signs. They're showing us exactly what the trade is. It's just, it's not reaching as many people because, as most people do, 3:30 comes, oh, there's only 30 minutes left. They shut their computer off. 4 o'clock, there's no retail trader out there that's sitting at a laptop, trading through a Schwab account that's watching the market after 4. They might have, the financial channels on, so on and so forth, but they're not really looking at that point. So it's almost like they've transitioned over to doing it that way because there's less people actually looking, so they're not showing as much. Now, how does this translate into actually trading the pre-market now? When we see controlling prints, it's been like a godsend. There's no reason in the world I don't want to do a morning meeting. I would love to have stocks that tell you this is what's going to happen every single day. But as we've noticed, I haven't been able to do that because there's just nothing really going on there. So when something actually gives us controlling prints, the pattern we've seen is that if, let's say, a stock is coming to 650, I'm just making up a number, we'll see great buying, 640s, and we'll see great buying at 660s, but they're not actually hitting those controlling marks. So the times that they are, it's holding so much more weight into the overall of what we can expect for that day. Now, you might have a personality of a stock that, once it opens, it shows you that it's just going to continue off-level prints. It's going to continue up. It's going to continue going. Okay, but for the most part, any type of controlling prints haven't really been longer term. They've been, if I show you this, there's a reason. I don't want to do it this way because I could have did it yesterday going in there. So I have to do it right now. So we've been seeing a lot of the time frame being affected because of that, where I would see prints at 8:30, let's say a year ago, which I'd say, I don't expect that to happen till 10:30, 11 o'clock later on in the day, when I'll see those same prints at 8:30 now, and it's showing that it's more of the overall move that we're going to expect. I mean, the perfect example is this NKTX from yesterday. Okay, so when we go to NKTX and we look at the actual chart, yesterday's prints that came in at that 1350 level, that's where we saw our dominant market maker. And they actually gave us prints to come in. And then as we're coming back up, that the 1450 prints were the best prints that we actually saw there, knowing that that market maker was sitting right at that point. And if you notice, it had its pullback. It never broke underneath. And it shows going into the entire day how important those actual prints sitting at that 1450 level were. When in a year ago, if I saw those 1450 prints, I'd be like, okay, trade at the open, goes 14, goes down, down to 14. We look for the trigger back up to 15. So it's almost a longer term thought process that's going into it. And I'm sorry, I just looked at the chat. Did you have a question on something I said? Feel free to stop me as I'm talking. This is, conversation.
That was perfect. So it sounds like the market makers and that's why we don't trade the chart. If they notice a pattern, they'll change the pattern. Well, and we just saw Robinhood get involved in pre-market trading or whatever it is, so that pattern is something they've noticed, and you're saying that they've changed it. So what patterns are going to give us the most indication? I know previously early in the morning, we'd say maybe that's a longer term position. Right before open, that's somebody that needs to make money now. What patterns are still there that we can use to set up in this environment for our best trade of the day or our first trade of the day?
So it's going to start off, if you have controlling prints, focus on it. Okay. Unfortunately, yesterday you could see NKTX was very ugly trading, but it actually followed, even though the chart looks ugly, it actually followed its rules really well at most points. So it's going to come down to controlling prints, but I think a lot of people are overthinking the fact that there isn't much there. So essentially, it breaks down to this simple. What I'm looking for is a stock that has chart potential. What I mean by chart potential, it's moved. Okay, it's not just consolidated bars or staying in a consolidation. It's got some north to south in it. It's got the ability to move. That's really all I'm looking for. Now, once I have those stocks down, I'm looking for what would a perfect trade be here. Because now it's in this spot, but that spot means nothing to me. Without prints to back up what the chart shows, it means nothing. So I can't make something out. I could have the most bullish looking chart in the pre-market, but in my mind, that just means it can move. Doesn't mean it's going to move bullish, doesn't mean it's going to move bearish. I just know it can move. So simply what I'm doing is my game plans aren't real game plans yet. I'm just setting up what would a perfect case scenario be? The market opens, I see this, what would I do? So when that happens, now I can actually trade it, but I have to wait for it to actually happen. So it's not setting, there's no way to set up or from obviously yesterday, and you're taking, more of a textbook into the Cliff Notes type trade. There's nothing I can do yet besides envision what would the perfect trade here be. Because the problem is that when you have nothing to go on, you try to figure out a game plan. And then you start seeing little microscopic things that you start making into something. When in all reality, you got nothing. You just have the ability for a stock to move. That's not how you trade. That's what you need to trade. You see what I mean? So it's okay going into the morning with nothing.
Well, and so let me ask a similar question, but the opposite side of the coin. What are things, and this can maybe now get even into the open the first few minutes, what are things that maybe we should be paying attention to, patterns we can look for that are going to kill the trade that we thought was there, right? It's going to take away that trade or take away a lot of the percentages because it was maybe just a pre-market type of thing for them.
So look at the substance.
Yeah.
So I look a lot, especially when like I said, what's my perfect case scenario? If prints were to come in, what would I want them to look like? So if we see a stock that looks real bullish with no substance in it, now I don't have a game plan to trade yet, but I do know it's sitting on a weak foundation, so it's going to be easier for it to come down. That's a variable that I have in that stock that I can now add if prints come in. So when I think of my perfect case scenario, my perfect case scenario is not going to be long because a continuation on a stock that has no real substance within it is not high probability. You see what I mean? So I'm looking for almost a lack of things at important spots. On top of, obviously, I want to just see controlling prints because that's the easiest way to go about it. I can make my calculation, boom, I have a game plan, and trading becomes, I don't have to think about anything. So when we have these stocks that have nothing in it, there's certain spots where even if the stock is going to continue to moving, something should be around it. So the lack of it even being there just gives us a variable into what that chart has to look like eventually.
And you could even extend that to lack of hitting a level, lack of price action and open. You could extend that actually to a couple of, I guess, games or market maker patterns to look for, right?
100%. Once the market opens, again, I have stocks that had potential for the most part on our list. We haven't had great stocks that said this is exactly what's going to happen. So once that market opens, it's taking that kind of a lack of certain spots, or the lack of, if a stock's going down but there's no selling, a stock's going up without buying. Okay, I want to see, once the market opens, is it following that same suit? Now, all of a sudden, is the stock that went up on nothing, is it getting a ton of buying coming into it? Is it, so it's all going to kind of correlate to what we saw, or the lack of what we saw in the beginning. Now, another thing that's been going on, you've seen a lot of Laker color prints coming in at, the second the market opens. So in my opinion, the first couple of minutes in the market, the past, let's call it at least just these past 2 days. Okay, if you don't have a game plan set from prints that happen in the pre-market, there's nothing you could do. So even saying the first few minutes of the market open isn't really saying much yet. There's been a lot more patience. It's almost been like a shift in what the market day looks like. You used to want to be at your computer at 8:30, because 8:30 is when trading really started. That's when you're going to see, your show of hands and stuff like that. It's almost like it's shifted to like 9 o'clock now before you even see anything start to happen. So when you're going through your list, it's just basically volume in a stock that has a potential of trading, because I want to see something from the, volume from the pre-market carry over into the market. But with the way it's like I said, it's been delayed. It's almost like you can get to your computer at 9 o'clock now, but you got to stay till 4:30. Do you see what I mean?
Yeah, I've noticed. Yep. And I will, you've mentioned, and this will be, I guess, the last thing to say about it, and then we can move on. But Oscar has had a couple of calls, I think, where there's not much trading going on in the pre-market, but they do show controlling prints. And that ends up, like you said, later in the day coming to fruition and actually giving some of the better trades when you look back on things. So that was something that I wrote down. If you get controlling prints or a show of hand in the pre-market, follow that sucker, because they're adamant. That's showing you the adamance of a market maker.
Yeah, so I think that Eric actually asked this question maybe a week ago or 2 weeks ago or something like that. But he said, if you have prints but nothing's going on, you got to ask yourself, okay, when the market opens, is this a trading stock? Is it going to trade today? So like, for instance, if it's AMD and you have great prints, but it's doing nothing in the pre-market, well, hell yeah, those prints are going to come to fruition. That's something I'm going to pay attention to. Now, you could have great prints, but if it's going to, the market opens up and it starts off with a 50,000 bar, and then, a 70,000 bar, and then 30,000, and it just doesn't show that actual trading coming into it, it's not going to help you, because those prints, even though, they're showing something that's going to happen eventually, there's no trading behind it. There's no one for you to follow and actually trade within that situation. So that's a great thing to find, is great prints. If a stock's not moving, you just have to make sure it has the potential to actually move. One of the easiest things to do is just look back. Just go on your minute chart and look back a couple days and see, when the stock opens, does it move? Because otherwise, now you're getting caught on, and I'm sure everyone's been here before, and you get caught on a stock that's got great prints, but it never ends up trading. And now you just wasted, 25 minutes of, the open of the morning because you're waiting for that. So the key there is to absolutely use those prints, but it has to start trading. And then based off what we've just been talking within the pre-market, those prints hold even more weight because they needed to do it now. No one's doing it during the pre-market. Why did they do it during the pre-market? We got to think of what the psychology behind that is. So obviously they're looking for something today. Now, if the stock doesn't warrant trading within it, then unfortunately at that point, there's just nothing to do with it, because you can't trade a stock that's not trading. Make sense?
Awesome. Thank you.
great questions. Okay.